Picture this. It's a bloodbath on the charts. Red candles are printing faster than you can blink. Panic is sweeping through the markets, and the big institutions are trembling. In the old world, the world of 2008, this is the moment everyone looks to Washington. They look to the Federal Reserve. They wait for the printing press to fire up. They wait for the bailout. But this time, the phone rings and nobody answers. There is no cavalry coming, no taxpayer check to soften the blow. If you fall, you hit the concrete. This isn't a doomsday scenario. This is the new reality just confirmed by the US Treasury. Scott Bessent, the man tapped to run the American economy, just looked the Senate in the eye and said 3 words that change everything for Bitcoin: no federal bailout. The mainstream media might tell you this is a disaster. They might say the government is abandoning crypto. But if you understand money, if you understand why Bitcoin was built, you know that this abandonment is actually the most bullish signal in a decade. Why is a no from the Treasury actually a massive yes for the future of finance? Let's break it down. First, let's look at what actually went down on Capitol Hill. Scott Bessent was in the hot seat for his confirmation hearing. Sitting across from him was Senator Elizabeth Warren, and let's just say she isn't exactly on the holiday card list for most crypto investors. She threw him a curveball, a classic trap question. She effectively asked, if the crypto market implodes, if the bubble bursts, are you going to use American tax dollars to bail out these crypto firms? Think about the politics here. If he says yes, he angers every voter who hates seeing their money wasted on risky bets. If he says no, he risks spooking $1 trillion market. Bessent didn't blink. He didn't stutter. He said, I don't think they need a bailout, and I would not recommend one. He went further. He explicitly stated that cryptocurrencies represent freedom. He wants a marketplace where people are free to make choices and free to face the consequences. In simple terms, the US government just told Bitcoin, you're not a child anymore. You want to be an asset class? Fine. Move out of the basement, get a job, and survive on your own. Now, why does this matter? Why shouldn't you be terrified that the safety net is gone? Because, ladies and gentlemen, safety nets are for children, and they come with chains. Here is why Bessent's no bailout policy is the catalyst we've been waiting for. Reason number 1. The death of moral hazard. Remember 2008, the big short? The banks gambled with our money because they knew they were too big to fail. They privatized the profits and socialized the losses. It was a rigged game. Bitcoin was invented specifically to stop that. By saying no bailouts, the Treasury is finally treating crypto the way it was meant to be treated, as a pure free market. No backroom deals, no Fed put. If a crypto bank behaves recklessly, it dies. This survival of the fittest ensures that only the strongest, most valuable projects survive. Reason number 2, legitimacy. You don't bail out gold. You don't bail out art. You don't bail out real estate when the market cools naturally. By refusing to bail out Bitcoin, the US government is inadvertently admitting that Bitcoin is a real asset. It's not a toy that needs protecting. It's a financial instrument that can stand on its own 2 feet. This is the graduation ceremony for the industry. Reason number 3, the green light for Wall Street. Institutions, BlackRock, Fidelity, the pension funds, they don't fear risk. They fear uncertainty. They fear the government changing the rules halfway through the game. Bessent just drew a clear line in the sand. He established the rules of engagement. Wall Street loves clear rules. Now they know, okay, the government won't save us, but they also won't ban us. That is the signal they needed to deploy capital. So we're entering the era of sink or swim. What does that mean for you, the individual investor? First, the training wheels are off. Expect volatility. Without the government dampening the blows, market crashes might be sharper and recoveries might be steeper. If you're investing in meme coins with zero utility, hoping for a miracle, understand that there's no referee to save you. Second, due diligence is king. In a bailout-free world, Fundamentals matter. Does the project solve a problem? Does it have cash flow? Or is it just hype? The projects that are built on quicksand will sink. The projects built on bedrock will become the new Amazons and Googles of finance. And third, and most importantly, self-custody. If the Treasury won't bail out a crypto exchange that goes bankrupt, then why are you leaving your money on one? Scott Bessent just gave you the best advertisement for hardware wallets in history. If an exchange goes down, the taxpayers aren't coming to refund you. Learn the mantra, not your keys, not your coins. Take ownership of your assets. We are witnessing a historical pivot. For years, the crypto industry asked for legitimacy. Well, we just got it. But legitimacy comes with a price, accountability. Scott Bessent isn't offering a handout, he's offering a level playing field. The question is, are you ready to play? Do you prefer a financial system that is controlled, manipulated, but safe? Or do you want the Wild West, risky, volatile, but truly free? I want to hear from you in the comments. Does the idea of no bailout scare you, or does it make you more bullish on Bitcoin? Let me know. If you want to stay ahead of the curve in this new economy, make sure you smash that like button and subscribe. The rules of money are changing. Don't get left behind. See you in the next video on the Zen18.vn YouTube channel. Thanks for watching.